On today's episode, I'll be interviewing my co-founder Peter about his new book, The HoldCo Guide: How Entrepreneurs Structure and Build a Holding Company That Lasts. We'll talk about what compelled him to write the book and what he hopes readers will get from reading it. First off, congratulations on writing your first book. I was really enjoying to go through this, and it feels like what we talk about every day as we kind of evolved from running a single business to now many businesses and with a HoldCo. But I think, yeah, very exciting. And all right, Peter, why don't we just start out by giving everybody an overview, maybe a 30-second overview on what the book was all about.
Thanks for letting me talk about the book. Yeah, just at a high level, the HoldCo Guide is really a practical manual, just an intro primer, so to speak, on holding companies. Like, what is a holding company? What are the different structural aspects of a holding company? Most importantly, like, just what are the mechanics that make holding companies an interesting way to think about business. So I talk a lot about the concept of capital allocation. So, what do you do when you have profits, and how do you turn that into something more productive? And then beyond that, a lot of examples of different types of holding companies, whether they're, capital allocation, more operationally focused, or just, really focused on the sector side of things. And so, I did a bit of research for this as well.
All right. Before we jump into the book some more, what motivated you to write the book? What did you find, wasn't in the market that you wanted to kind of fulfill?
I didn't set out to be like, I need to write a HoldCo book. It was very much an organic process. During the course of our evolution from just running a single agency to having multiple agencies, just really envisioning this HoldCo concept for Barrel Holdings, I was sharing this online, writing about it on my blog, posting up on social. And through that process, I'd get contacted by different agency owners, other founders, just people interested just generally in this journey that we were on. I'd happily take those calls and share what I could about what we were learning at the time, and also just trade notes with others doing something similar. And through those kind of conversations, I started to think about, okay, maybe I should jot down some notes and just kind of aggregate some of the learnings as well. And then at one point, someone asked me for a list of like reading materials and podcasts on the topic. And when I went to kind of compile those together, I realized like they were all kind of telling like different aspects of holding companies, but it didn't address like holding companies directly. So I was like, all right, like maybe this is an opportunity for me to, just synthesize my notes and understanding thus far and write just something brief about holding companies. So I started doing that, and I thought it'd be, like a simple PDF or maybe like a really focused blog post or a LinkedIn post or something like that. So just started filling up a Google Doc, and before I knew it, it was 10,000 words, 15,000 words, 20,000 words. I think at that point I was like, maybe it's worth trying to get this published. So that's kind of how.
Really cool to see all the different stories and case studies that you go through, and it's more of like a practical application of not just like the theories around HoldCos, but what are some real life examples. And you go into a lot about like the types of different holding companies where, in our conversations, we may not really clearly delineate like, is it this type or that type, but you kind of go through and break it down into specific sections. And yeah, I think it'd be helpful just to talk a little bit about that, and we can dive into what type of HoldCo we are as Barrel Holdings.
The big insight or takeaway from this book is this definition of HoldCo, like two different major types of HoldCos. So one being this capital allocator HoldCo, and then the other is what I'm calling the operational HoldCo. And you can think of it as like, not like two distinct buckets, but maybe almost like a spectrum of like HoldCos and where they might belong. So, I can explain like on the capital allocator side, these are holding companies that are very much like about making the right decision on which companies to acquire and what to really do with the capital that they have from their cash flows. And so, Berkshire Hathaway comes to mind on this. And because what they're concerned about is taking the cash that they have on hand and buying really good companies, which then over a long period of time will allow them to produce more cash flow to buy more companies. And so they're not so concerned about, hey, we're going to roll up our sleeves, get in there with this business that we bought and do things that are going to make the business better. They're already looking, filtering for great businesses that, they want to bring into the fold. Now, operational HoldCos on the other end, they also look for quality companies, but then they also believe that they have some kind of secret sauce, some kind of playbook or a set of systems or support mechanisms to make companies that they bring into their ecosystem even better. And, a great example that I mentioned several times in the book is Danaher, which like started as like a HoldCo of manufacturing businesses, but then, they've evolved to like doing like life sciences. And they have this kind of really structured way of improving the businesses that they acquire through what they call the Danaher Business System, DBS. And we've come in and they expect these companies to adopt these frameworks and these ways, and they install leadership that kind of really adhere to this operational rigor. And so through that, they're able to improve margins, raise prices, and do things that make these companies better. So you kind of see at these ends, and there are many companies that maybe have some operational aspects, but maybe more capital allocator, or they might be more operational, but then sometimes they're going to be capital allocator. So like I said, it's not a clear bucket, but it's actually a helpful way to look at, okay, like where do you kind of belong on that spectrum?
I guess looking inwards, I feel like we almost started closer to the operational HoldCo spectrum when we first created Barrel Holdings, and we're all, we're in the businesses. Just from our history of running the businesses, we wanted to be very hands-on with how things are done. I have a lot of kind of operational involvement, but I think as we've kind of evolved and done more transaction, realizing maybe we're getting closer and closer to being capital allocators, where we're trying to find businesses that are independently successful, have a team in place, and we're more about selecting the right businesses that fit in our overall portfolio.
It's really fun to reflect on that because I think we've kind of ping-ponged, and like where I think we sit is kind of maybe more centered, but like slightly towards operational. And the reason being, even though like we've been pretty good about providing autonomy to our agencies to operate on a day-to-day basis, I think we do install certain things on the financial rigor, accountability, and we have like certain kind of like ways. Like we have a very strong POV on what a robust agency, the traits of a robust agency, right? Like these are things like you got to have high gross margins, you got to have really kind of focused expertise, specialization in what you do, and be able to articulate that through your marketing. You need to, invest in talent. Like we have all these things that we've kind of codified. We repeat over and over again to our leaders. And obviously a lot of leaders that we bring into the fold are aligned with us in kind of carrying these things out and believing in what makes for a good agency. But this is where like a lot of the work that we're doing on agency habits, the content we produce there is a reflection of a lot of the things that we talk about at the Barrel Holdings level. And so through our conversations and some of the things that we put on with our internal knowledge share, that like there is a big operational advantage that we bring to our portfolio. But at the same time, yeah, you're absolutely right. Like we do care a lot about the capital allocation side as well.
That kind of brings up another big theme that comes across some of the best HoldCos is like thinking about the idea of centralization or decentralization. Like how much, like what do you intentionally centralize at the HoldCo, and then what do you deliberately try to not manage centrally? And I think that's kind of what you're talking about. Is there are some overall themes and best practices and standards that we set, but like we're not in the business trying to run it, even though we have the standards that we want everyone to adhere to.
100%. I mean, you and I have had so many discussions around this, right? Because there are times that we're like, oh man, like, should we invest in like a centralized outbound sales function to like serve all the agencies? Or, hey, do we need like much more coordinated, like cross-selling across all the agencies that is centrally housed at the HoldCo level? And like, we talked about all these things, but I think we've resisted those types of centralization, and we kind of draw the line at certain aspects of finance. And even there, it's like the larger an agency gets in their portfolio, the more we're likely to kind of push it towards them and decentralize. And then the centralized like support is more for the ones that kind of are subscale and need that support. And so it's been like a great kind of evolution and dialogue as we've kind of worked through this. And that's kind of like, that's why it's been fun to kind of see all these different companies in the book, because like they kind of reside at different levels of centralization, decentralization, and it's good to learn from them.
In the book, I'm going to go into like some of the key things to centralize at the HoldCo are, capital allocation, risk, and then governance, some of the larger buckets. But then decentralization is operations, like how they actually, run the day-to-day business, decision making, and then anything related to like customers and employees, a company. So I think, we're getting closer and closer to more of that. Another theme that I thought was pretty relevant is the idea of like a sector-specific HoldCo. Maybe if you can talk more about, what is a sector-specific HoldCo and any like pros and cons on that.
So funny because, we talk about wanting to acquire like specialized agencies and such. And what I'm really talking about here is like, are there specialized HoldCos, right? What are the advantages of being specialized as a HoldCo? Because, like as a concept, there are holdcos like the Berkshires of the world. They're pretty agnostic about the types of businesses that they buy. They're going to buy, they have businesses ranging from insurance to energy to consumer and manufacturing. And so like, they care more about like the financial profile of these companies and, kind of less about like a specific industry or vertical or sector. And so it's a good contrast because, there are many holdcos, and I go and share a bunch of case studies, and then I have an appendix where there's even more examples in different industries with sector specific holdcos, these focus holdcos. It's the advantage that you and I talk our own focus with agencies, and especially like in the marketing IT space, is like you have some degree of operational depth, right? There's that built-in institutional like pattern matching. So you're like, all right, like these businesses, we kind of recognize all the potential problems that it might have and all the ways, the levers that you could pull to make it better. With that, maybe the underwriting M&A process gets improved. Perhaps like you're able to staff leadership a lot more effectively. You're able to just source deals better because you just have a very defined area that you're looking, and you could go deeper. There's maybe more opportunities to let's like combine these businesses and maybe get some kind of expansion on the multiples through that. And so definitely a lot of pros, but then, there's also some downside, right? Like if you're like really tied to a specific sector and, if it has tailwinds, great, you're kind of riding that, but then you could also face tailwinds. And you see this with like, whether it's real estate or energy, just like kind of cyclical sectors where like times might be good, but then also times can be pretty bad. And so like, how do you ride through that? I think there's, something to be said about, but then when you have a diversified holdco that you can kind of take capital from a declining sector and then like allocate it into a growing sector, offers you a little bit more flexibility there.
Just thinking about ourselves, I feel like we're somewhere in the middle of, we are specific in our kind of types of businesses. So it's mostly marketing, advertising, kind of professional services businesses in that space. But industry wise, it's very broad. So, there's a less of a concentration risk of like, let's say a certain type of industry, like can fluctuate a bit. We're kind of diversified in the different areas that each of the businesses covers.
Yeah, no, absolutely. And I think like if I was to kind of like pinpoint a risk or something that someone might point out for us is like, okay, so you guys are doing basically like services, like B2B services, right? And it's kind of like, okay, but what if like for whatever reason, like AI just kind of like completely upends the model that you guys are used to and like, kind of rips that, kind of business model from across, so no diversity in like the different sectors that we serve might save us then, but like these are kind of, we've had those conversations, and when we think about it, I think that we feel that that's a lot less likely, at least, in the long term that we're looking at.
A couple more themes that I thought were really interesting was about metrics, and especially for holdcos and looking at kind of long term kind of compounding. Like what matters? What should holdcos focus on?
I list a few different types of metrics, and like the few that jumped out to me, we end up talking about it now more frequently. The first one is free cash flow, right? So basically, this is like what's your collection of businesses, like what are they generating in the aggregate, the cash flow, and this is different than EBITDA. This is like actual cash. So this is after you pay your taxes. This is after you service whatever debt you might have. This is after you whatever kind of capex costs you might incur. I mean, very minimal on the agency side, but like whatever those things are. After that, like what is the actual, dollars left in that bank account for you to redeploy for something else? Free cash flow becomes a very important number because this is, if you can convert a higher percentage of your EBITDA to free cash flow, that means, you're running a pretty efficient business that you have more to compound. And so that's a huge one. This other one of like return on incremental invested capital. So ROIC. And this is really about like, hey, can you be thoughtful about that extra dollar that you're putting of your free cash flow into something else? Like, how's that growing? So, you put $1 in to acquire an agency, just fund maybe an internal kind of like expansion effort or whatever it might be. Is that returning, 10% a year? Is that going to, return 30% a year? Like, what is that kind of incremental return? And that just makes you think differently and measure differently, like how you're deploying capital. And the last one I'll say is like, this is like turning that into a more absolute number is like the multiple on invested capital, MOIC. So like with MOIC, call it like, we use this a lot in our kind of modeling of our potential acquisitions. So let's say on a potential acquisition deal, we're going to put in $1 million, and it's like, all right, let's model out the MOIC, different scenarios, like whether it's based on the cash flows it'll generate or on a potential sale after a 5 to 7 year hold. What is the potential MOIC? And if we can get to, like 5x or something in over the next like 5 years, like we kind of can measure like, all right, that's a good use of our capital because, that's a way to compound what we have. And so, yeah, these are just like helpful definitions. And I think, like in writing, like I had to just kind of get a bit more serious about these terms and like the examples. And it's been helpful because we've incorporated it in our own operations.
Honestly, like this is like the core anatomy of like how, what a HoldCo is and how it works is like if you don't have free cash flow to reinvest to grow or make more acquisitions that can then get more cash flow, essentially it's the compounding flywheel. Like if you're negative in this, like you'll start to compound in a negative direction, but you'll have cash you deployed in the right way and you just continue to grow exponentially over a long period of time. So yeah, that cash conversion is so key to the whole thing versus some of these other metrics, which may look good on paper, but unless it translates to actual cash, it doesn't really help you grow.
Thanks for listening to Agency Habits Podcast. A quick heads up, Barrel Holdings is acquiring agencies. We look for profitable firms with durable revenue and strong teams. If you're thinking about succession, de-risking, or scaling with a partner, visit barrel-holdings.com to see our buy box and set up a confidential call. Thanks.
I think chapter 7 or 8, you go like really nitty gritty into themes of governance, compensation, incentive structures. At that point of the book, people might find it to be a little dry or very specific, but like from your perspective, like, why did you decide to kind of go into that depth and include that into the book?
Yeah, you're right. Like to the average reader who, like this might be new concepts, it could be pretty boring. But it's funny because like I was kind of reflecting on our convos and so much of it revolves around governance. So governance has a lot of different components to it. So one is like, look, like let's talk about risk. Like what is our risk tolerance and like how should we think about that? And a big part is, as we've done acquisitions, like we had to take on debt, right? And there's this whole concept of like how much debt are you comfortable with, right? Like this kind of debt to like EBITDA ratio, basically through the research, like learning that, hey, like a lot of companies, they're pretty, like the ones that are durable are the ones that kind of are disciplined about keeping it at 2.5 times kind of a ratio of like debt to, outstanding debt to EBITDA. And like, but then those that have blown up are ones that kind of went a little bit too aggressive and then, something, they had a little decline in their business and then things blew up. So like, learning that kind of stuff and making sure that we have some governance rules around that so that it's like, hey, look, like unless we pay down more debt, let's not take on more debt and get out of hand with our acquisitions. Those things are good to talk about. And then there's other things like how you structure these companies, how you kind of keep them separated so that, if one kind of falls into like legal challenges, like it doesn't impact everyone else. Like, so there's all these like other aspects of governance that I might think about. And then just even more like kind of day to day is the governance around like how does cash actually flow around the HoldCo? So, when an operating company within the HoldCo generates cash flow, like how much of that, gets, kept within the OpCo for reinvestment or whatever, how much of that is put aside for taxes, how much of that it flows up to the HoldCo. These things, like you and I spent so much time kind of sketching these things out, like writing these rules down. And like, I think like it was always top of our mind. So like when it came time to like write this section, I was like, hey, I need to go in depth because this is about design and this is about HoldCo design. So maybe governance is like a boring word for it, but like, I kind of went to that. And then the other thing I'll say is like the compensation incentive structure is like so key because with a HoldCo, you're bringing a lot of different leaders to run different businesses within the portfolio. And one way to get performance is to make sure there's alignment in their both short-term and long-term comp structure. In addition to base salary, like what are the other kind of levers that you're going to pull to make sure that, they feel like they're growing the company adequately, but also generating the cash flow, which, is going to be important for the HoldCo, and how they get rewarded as they hit, certain milestones and whatnot. So, those are kind of things that I explore and provide examples for as well.
I like reading this because this is where things can get messy very quickly. If you think about how cash gets distributed among each company, and if each company does it differently, then you suddenly have different, you got to make sure you're doing it correctly. How you're incentivizing people, if that's different, then which is fine, but you just need to really be organized in how that all translates between bank accounts and taxes. Obviously, the huge layer. You got a really in-depth section about how taxes ultimately get impacted from all these structures. And I think that's important because at the end of the day, when we talked about like cash flow and growth for the whole co, like taxes is a big bucket where a lot of expenses go to. So the more that you can keep and reinvest from there is important.
I don't know if our listeners know this, but Sei-Wook basically works on taxes 12 months of the year across all the companies. There's some degree of tax work that needs to be done with our accountants and such. But and when I was writing the section, I know I was like pestering you to take a look at some of the drafts and give me some feedback on it because this is, taxes are huge because like if you structure a HoldCo right, like part of the advantages are that, you just like lower some of the tax liabilities through, smart planning. It's worth being very intentional with that design.
Cool. All right. Round things out. Who is this book for? What's an audience? And is it relevant for all in our bucket for agency owners, especially if they're running a single business? Like who could find this valuable?
Even though it's called the HoldCo Guide, really, I think it's an instructive book for anybody that has to think strategically about their excess profits. One of the things that I mentioned in the book as well, but that you and I just in our time operating an agency, we'd always kind of not have the best plan for what to do with profits. It'd be like, all right, do we just take distributions? All right, like, do we throw a bigger party for our team? Or like, do we buy a lot of bourbon or something? Like, whatever. But just having a model for like, hey, these are certain levers to grow. How do you take today's profits and make strategic investments that will, grow that profit in the future? And what are the different levers? And yeah, this is available to even single entity agencies because you could take profits, you could do a tuck-in acquisition. If you have some debt, you could pay that down, grow a new service line and invest in that. But tracking it is important because then you can be like, all right, like, am I getting the right kind of return on that invested capital? I think it's relevant to anybody running a business. That's why it is for entrepreneurs. I think it is for like investors as well if they want to kind of different lens on these types of businesses that exist out there. So it's pretty broad and I hope it's accessible enough. Maybe not all the sections as we mentioned, but like I think a good amount is.
Cool. And I know you've learned a lot about the process of publishing and writing the book. What's been kind of the reception so far after you've kind of published and gone through that?
It's been great. Like I didn't know what kind of what to expect. Just putting this out there. It's a self-published book. I went through a service and kind of got like a book coach to help me and all that stuff. And like getting it, seeing it on Amazon's cool. And I think like it was cool to hand my dad a copy. He was very proud of that. And then just, it's been good. Like, had a lot of people reach out and say like they've appreciated kind of checking out the book. And it's been very positive.
And where can people buy the book?
Yeah, it's available on Amazon. So on Kindle, paperback, hardcover. So they could go on Amazon, just look up the HoldCo Guide and they find it there.
Cool. Congrats again. On writing, publishing the book. I hope our listeners get an opportunity to dig in and to find some value. And excited to see the next book whenever it comes out. Thanks. And until next time, everyone, thanks for joining.